Welcome back. My name is Arya, and I don't waste your time, so let's get straight into it. As you guys know, I like to invest in companies which are often deemed as being mega moat companies, right? The companies which I invest in are oftentimes very dominant with very wide moats and are oftentimes even the leaders in their respective industries. We have companies like Amazon, which is a leader in global e-commerce, as well as AWS, being the biggest cloud provider among of course, the big three, right? CRM, Salesforce, the biggest customer relationship management software in the world. Google, biggest search engine, and I guess the third player in cloud computing. So there's that as well. Starbucks, honestly, the best QSR, quick service restaurant, as well as the biggest coffee chain in the world, so on and so forth. ASML, of course, the most dominant in their respective industry out of all the different examples here. But with that being said, in today's video, I have a little bit of a different one cooked up for you guys. We are going to be looking at a little known British retailer known as Games Workshop. Now, off first glance, again, this isn't particularly appealing, and given the portfolio that I have here, this seems like quite the outlier to possibly even be a candidate to be included in the portfolio. But with that being said, as I looked into it further, there's some very interesting qualities that this company benefits from. And of course, we're going to be diving into what it is that they exactly do, and of course, the financial metrics and all that type of stuff. With that being said, what is Games Workshop? Games Workshop, as I just mentioned, is a tiny little retailer, I guess you could call it. And they make these action figures that you guys could see on the screen now, and they sell them for obscene amounts of money. Each little action figure could sometimes cost upwards of $50, $100, $200, and the fan base that they have, as I mentioned in the thumbnail, is quite the cult following. The people that are involved in these Games Workshop games, such as like Warhammer is, I believe, their main game and main action figures and collectibles that they offer. The people that are involved and collect these things are fanatic about the products that this company makes, and over time, uh, Games Workshop has kind of created this very large community. And when we dive into the network effects and all that type of stuff later on in the economic moat segment, I'll make mention of it there as well. But as more people get involved with Games Workshop and Warhammer specifically, the network effects increase exponentially, whereby more and more people will become attracted to it and start collecting these action figures, so on and so forth. Again, doesn't seem like that impressive of a company. Like, it's just action figures. Okay, cool, whatever. But you guys would be mistaken in assuming that this probably hasn't had great stock performance over the, I don't know, call it 5, 10, whatever years. With that being said, I have pulled up here on FinChat the total return of this company over the past 5 years here. And it's done good, 185%. That's, I want to say, roughly what, like a 22-23% CAGR. So it's actually done quite well. It's up there with the Costco's of the world. What's interesting is if you guys flip to the 10-year view, you could see that this stock is up nearly 3,000%. 3,000% on the 10-year view. Now, I can't do the math off the top of my head, but that's one hell of a return. And additionally, if you look at the quick stats available on the left here, you would notice that, first of all, on the return metric side, they have return on capital employed of 70%. 70%. That's significantly higher than world-class companies that I invest in personally. I mean, Google's what, in like the 20% range, Microsoft in the 30s, Apple, which is an incredible outlier, 50-60% return on capital. So Games Workshop, just off first glance, has incredible return metrics. Additionally, this is further exemplified by their margins. You pay attention to the margins here. Gross margins is 70%, right? And for those who don't know, gross margins is, for example, if you take in raw materials at $3 and you're able to sell it at $7, the difference of that is 70%. So the $7 profit that you're able to make in between there, that would give you gross margins of 70%. Additionally, if you look further down, there's operating margins of 37%. And to give you guys an idea, I think the average S&P 500 company is in the range of about maybe 10-ish% operating margins. So this is almost 4 times higher than the average S&P 500 company. Free cash flow margins of 40%. Important thing to note here is net margins is significantly lower than free cash flow margins. This is a little bit interesting. As we go on, I want to dive deeper into maybe why that exactly is. But that does mean that if you look at the payout ratio, which by the way, they pay a massive dividend, it is a European company. So of course, European companies, if you didn't know, prioritize paying dividend as opposed to buybacks. But on top of that, 110% payout ratio, meaning they pay 10% more of their profits out to shareholders as a dividend, seems a little bit unstable off first glance. No, it's because of free cash flow. And you know what? Actually, oh, I have it pulled up here. I could demonstrate to you. So if we have free cash flow pulled up next to common dividends paid, you can see that they made $240 million in free cash flow over the last 12 months compared to the $180 million in dividends that they paid. And here, we'll put net income next to it. As you can see, net income was 170, dividends was 180. So just off first glance, payout ratio is a little bit misleading, but based off of free cash flows, they're more than able to cover that, what's it called, dividend, right? And again, very hefty dividend that this company pays, but despite that, as you can see, historically at least, they've compounded the share price in addition to the massive dividend that they're paying. With that being said, let's dive a little bit deeper into what makes the company so special. And I do think that they benefit from two economic moats, so the aforementioned network effects. And additionally, as we scroll down here, you might notice that action figures selling for $170, $190 each. So as you can see, it's a case of this company being able to flex their pricing power over time. And a little bit later into the risk factors as we go, that is actually one of the risks that I've identified with this business. But as you can see, over time, Games Workshop has been able to just gradually increase the price on their action figures. And of course, it's a very scale economies driven business, so it doesn't really cost much to actually be able to create these action figures, right? As we mentioned, with the incredible margins that the business benefits from, right? 70% gross margins. So in aggregate, this business is able to create these action figures for $3 and sell them for $10. Or if we were to scale that up, they're able to make them for $30 and sell them for $100, right? Gross margins of 70%. So as you can see, very, very high prices on these different action figures and whatever that they sell. And people are more than happy to buy them, right? If we go back over here onto FinChat, and I just want to demonstrate the revenue chart over time here. The total revenues, you see that they're able to grow revenues consistently over time. Now, one thing to note is I'm seeing it's a little bit slowing down since 2021, 2022. So I would assume it got boosted way ahead demand-wise during the COVID period, and then it's started to stagnate since then. With that being said, I pulled up the Morningstar report. It's not really too revealing. The only thing that I want to point out here is April 12th, which is actually 10 days ago as the recording of this video, they have upgraded this company to have a wide economic moat. And previously they had rated it as being a narrow moat. And then they talk some stuff about the earnings per share and the dividend and all that type of stuff. But yeah, I just wanted to note that Morningstar, which I include their reports a lot on my videos. I think they're a great research firm and everything like that. So yeah, quite a reputable source has in fact upgraded it to a wide economic moat. And of course, as we know, retailers isn't, and retail as a whole is not a very great industry to be in, and very narrow moat, very small differentiation, so on and so forth. With that being said, so far we've kind of gone over the quantitative aspect of things, right? The financial performance of the company and what they do and all that type of stuff. And I just wanted to go over and kind of touch on the qualitative aspect of things. And what I did was I went onto Reddit, of course, the greatest website on earth. That was a joke. And I kind of asked, or I searched for, is Warhammer expensive? Or I think one of my search terms was, why is Warhammer? Actually, go back. Yeah. Warhammer 40K. I don't think you guys could see this, but I typed in Warhammer 40K too expensive Reddit. And I clicked on one of these first links here. And here we have a person talking about how they spent $127 American. I think that's roughly 150, 160 for you Canadian folks. So this person seems to have worked at Games Workshop, and he goes on to say, when I worked at Games Workshop in the good old days, they mostly sold pewter miniatures and were just trying a few plastics for large models and new large run plastic B keys. They sold metal minis for $5 and they sold them to staff for 50 cents per pound. So it seems that, again, as time has gone on, they've gradually increased the prices for all this stuff. People are willing to pay because of the IP, I think. No other wargaming company has created a setting that competes with 40K 40K in my opinion. 40K, again, the game that they have. I've tried other games and some have better systems and great models. Their universe never captures my imagination like Warhammer 40,000. So again, speaking to the moat a little bit here, as you can see, like the game is special to these people, right? The people that follow it, there's a level of, I guess, detail and it's the game is special, right? Like this person talking about his imagination and all that type of stuff. Like, again, this is the people that follow it. I don't really do this stuff, right? But to them, it seems important. Until another company can come up with a setting that has such a mass appeal, GW, Games Workshop, are just competing with themselves. Interesting input here, right? So again, speaks to the wide economic moat that Morningstar is assigned here. Let's do one more here. I can't say what a genuine fair price would be, but to play devil's advocate, there's intricacy in the molds for the models with many small pieces which require extensive equipment. Plus, while you do paint and assemble yourself, okay, I should have mentioned this earlier, you do actually paint the things yourself. So there's a level of like craftsmanship that you have to input yourself. So when you buy the raw, what's it called, action figures, you have to actually paint them yourself later on. And there's actually a marketing study done, with completely unrelated, but there's a marketing study done which says if you build something yourself, for example, like IKEA furniture, you actually like that furniture more as opposed to getting the furniture pre-installed. You actually put more man hours into it, and you're kind of more attached to that product as opposed to something that someone else built because you put more effort towards it and all that type of stuff. So I guess the same applies here, right? Because all these people are painting it, they have a additional level of attachment to the product as opposed to other companies, right? Plus, while you do paint and assemble yourself, that requires buying paintbrushes, hobby knives, and other implements, which all add to the expense. Even if the prices were more reasonable, you'd still be paying a good price. Even if you're 3D printing models to help yourself out, there's still a cost to being paid for it. And if people want something badly, they will be willing to pay top dollar for it in any case. Yeah, interesting. So this is actually jumping ahead a little bit here. This is one of the risks that I had identified on Etsy and stuff. People have started to 3D print the different Warhammer action figures and just sell it for like a third of the price or like half the price, whatever the case is. And this has kind of dug into their moat a little bit because you could get the same thing. Might as well get it that way, right? But I guess there's a little bit of specialness of getting the actual authentic item. With that being said, I want to jump over. I was reading the right here. Yeah, okay. So they say we believe shareholder value is created primarily by not destroying it. Very interesting perspective they have here. We have no intention to acquire other companies, nor to dispose of any of those we own. We return our surplus cash to our owners and try to do so in an ever increasing amount. A working cash buffer of 3 months worth of working capital requirement has been set aside alongside 6 months worth of future tax payment, or we decide how much cash is truly surplus for the purpose of declaring dividends. So this company, essentially all the excess cash that they make, as the payout ratio and the free cash flow payout ratio would lead you to believe, they just pay it out as a dividend to the shareholders, right? And they have absolutely no intent, as they say, and as they have a massive track record showing it, they have no intention of buying other companies. And I think the reinvestment that they do into the business, that's done aside from the dividend that they pay, all that type of stuff. They have provided you with 3 KPIs that they pay particular attention to. I'm going to zoom in here a little bit. The main KPI that they really like to pay attention to is the gross margin, which has been ever increasing since the founding of the company. And they also pay attention to the operating profit margin and where's it? The revenues. Yeah. So the 3 key things that management pays particular attention to is the revenues of the company, and then the gross and operating margins of the company, which is again ever so slightly increased over time due to the pricing power that this company benefits from. You guys might be thinking, okay, great, Arya, seems like a decent company, seems like it has a moat, and there's like a cult following of nerds. I'm sorry, cult following of nerds who love buying all this stuff and all that type of stuff. But how fast is this company growing? Well, you'd be ecstatic to find out that revenue growth is in the double digits, guys. Revenue growth is 11% for the core revenue growth segment, whatever that is. Retail is up 12%, and then online trade and no, sorry, online's up 5%. I guess that's direct to consumer. And trade, I'm not sure what trade is. That's up 13%. But I think in total, they break it out here, or is it, they just give us segments? So their biggest segment is this first one, the core revenue. If I remember correctly, I think it's like 400 million out of the 600 million or whatever. So yeah, like the biggest revenue contributor is that first segment, and that's up 12%. I would assume they have double-digit revenue growth from there. So yeah, like a pretty fast growing company, right? If we take the S&P 500 average roughly at 6%, this is like quite fast growing company, right? Double digit growth. And it seems sustainable so far. Like, I'm not really sure. Again, I actually want to go to one of the stores that we have here in the place where I live, which shall not be named. Um, but yeah, like we have a store in my country. And I do want to go check it out and see how it is inside and maybe talk to some of the workers there. But so far, the idea I'm getting at is they've flexed their pricing power, and I'm not sure if that'll continue at like a massively inflation beating pace, but yeah, there seems to be some moat to it. With that being said, if you guys didn't know, yes, this is in fact the Superman actor. I kind of wanted to just throw this in at the end here. But yeah, he absolutely loves Warhammer. So I just wanted to play this clip of him talking about it just for fun.
And he's got a lot of them, ladies and gentlemen. One of your hobbies is you paint.
Makes you sound weird.
Well, you do have more hobbies than the average man, I'd say. But you paint. Is it World of Warcraft?
Warhammer.
Warhammer. I'm a fool.
It's Warhammer, Greg.
Okay, Warhammer. So what? So you paint by hand?
Yes. Yeah.
Does everyone do that, or can you buy them already
No,
painted?
you have to paint them, but it's just how much effort you put into it.
And you put a lot of effort.
There's the painting, modelling side of the hobby, and then there's the gaming side of the hobby.
Okay. And when you paint them, what do you do with them then, Henry?
Then you put them together in little armies, and you fight against someone else's army. It is.
So yeah, the crowd's having a real laugh about that one. But yeah, as you can see, it's just like any other collectible. So you collect them, and then you have imaginary wars with other armies, and that has returned 3,000% in the past 10 years. Just I'm speechless. But yeah, that's pretty much what you do. You just they're action figures and you collect them, so on and so forth. At the end here, again, I wanted to get to the risk factors. So this is one, or I guess two risk factors that I've identified with the business. People are buying the rip-off versions off of Etsy. Not really rip-off versions, but 3D printed versions where it's not authentic directly from Games Workshop, and they pay like half the price, a third of the price, whatever the case is. So this guy here, apparently, he said earlier in the video that he has been buying Games Workshop action figures for, I think, like 15, 20 years, something like that. And he's complaining about the price increases. We'll listen to him talk for a little.
Unit? I mean, if the kid wants a battle wagon, it's $115. I mean, unless your parents are rich or something, $115 is a ton. And then you have to be like, well, do I really want this battle wagon at $115? So I feel like Games Workshop is slowly pricing themselves out. And I know this has been the complaint all along, and Games Workshop really is a premium hobby. I get it. It's like golf or horseback riding or any of that. There's going to be cost. But the problem is, I don't see any 3D printers printing horses, okay? I don't see any 3D printers printing entire golf courses. It's not happening. But what I do see is 3D printers printing models. And last time I checked, Games Workshop's main MO is selling models. So they can't just stick their head in the sand and go la 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 with their fingers in their ears. They just can't do it. Because with 20-some million printers sold in 2021, that's a lot. How many think were sold in 2020? How many think you were sold in 2022? How many think you were just sold in 2023? That's a lot of printers and a lot more competition for Games Workshop. Now, we really can't deny the Games Workshop has excellent quality in their miniatures. Their miniatures look cool, they're distinctive, all of that. But the price is outrageous, okay? Now, I've got a couple examples here, just some things I pulled off the shelf that were just good examples of Games Workshop being ridiculous, and how I've slowly been going to Etsy for some of my Warhammer stuff, and it's just because, I mean, look at your grocery bill. Like, it's insane, and if you have children and all that other stuff, life is very expensive. So, this is a Troggoth Hag, okay? And this Troggoth Hag is 3D printed. I got this Troggoth Hag for $30 on Etsy. $30. The real Troggoth Hag is like over $100. Another thing that I got was 3 of these guys for $20. Now, admittedly, she looks pretty much like the Troggoth Hag. These guys look a little different. They're like creatures.
So yeah, he goes on to kind of talk about him buying it from Etsy and so on and so forth. But as you can see, people like him who are just diehard fans for 15, 20 years, whatever the case may be, are now moving to Etsy because the prices for collecting these things has just become absolutely outrageous, right? $200 for a tiny little action figure. And of course, the action figures themselves is the main business of Games Workshop. But the things that 3D printers can't really replace is the boards for this type of stuff and some of the bigger items. I think maybe some of castles, whatever the case is. I guess that would be harder to 3D print, so on and so forth. But again, as you can see, they've increased prices a lot, and that's kind of pushing away some of the core fan base. And of course, these are your average people, right? Like they're not going to have $200-300 a week, a month to blow on some action figures. You know what I mean? So when things were, I don't know, like 10, 20, $30, I'm sure it was much more manageable to have that as a hobby and collect them and I guess go to war with your other armies, so on and so forth. But with that being said, I think I covered everything. Also, I wanted to mention, you know what? I'll pull it up here. This gentleman here, Tim Overdyke. I think that's a soccer reference. I'm not sure. This gentleman here, he asked for an analysis on Games Workshop. So that's what inspired this. I have looked into Games Workshop before, Tim. I briefly looked into it like 6 months ago or something like that. But yeah, Tim, you were the inspiration for this video, so thank you very much for the video idea. And quite honestly, I actually love when you guys leave comments and like give me ideas for videos and all that type of stuff. It's very cool to me that someone at probably, I don't know, some other part of the world. I'm assuming you're European by the fact that you asked about Dino Polska. It's a Polish grocery chain, if I remember correctly. Yeah, I'm assuming that Tim, you're in fact European. So yeah, someone from a completely different continent is able to leave me a comment, and my behavior in life is changed because of that. But yeah, anyways, guys, I love it. If you guys want to leave me comments on different stock analyses that I should do and all that type of stuff, I'm more than happy to do that. With that being said, thank you very much for watching. Have a great day. Hello again. I actually lied. That is not the end of the video. So I actually ended up finishing the entire thing. As you can see, like I rendered it and everything. I even made the thumbnail. Like everything good to go. I was about to upload it. Then it suddenly hit me that we didn't go over valuation. So I just wanted to stick this in at the end here. I went ahead, I used the OTC listed version of it. So that's the ticker for that. And it automatically loaded in all the data and all that type of stuff. With that being said, I used free cash flow numbers for the following year, so I was able to find the analyst numbers for that. And take this with a grain of salt. This is a $4 billion market cap company. So these analyst numbers, like I don't Bible. But anyways, nonetheless, I still put it in. So roughly $170 billion in free cash flow that they're projected to make. And then the way I landed at the 12% CAGR number is they're guided to do about 8 to 9% revenue growth for the next couple of years. And then the way I arrived at that is I'm just assuming, you know what, I'm not sure if they go to FinChat and actually check this out. I'm not sure if they actually do buybacks, but the way I landed at that is I just assume they do a little bit of a buyback, and then additionally they're gonna have like 1 to 2% free cash flow margin expansion. You know what? I'm too lazy to go find that. Anyways, yeah, that's how I arrived at the 12%. And with that being said, like the stock looks great. I mean, it's not an expensive company by any means. It's roughly, even on FinChat, we could actually see it's a price to cash flow of 23. So yeah, roughly in line with the numbers I have loaded in here. But this is forward basis. So I think they actually go down a year from, like, their free cash flow projected is less than the most recent year. So hence why the forward free cash flow estimate is less than trailing one. So yeah, with that being said, like it ranks pretty high on my calculator here. Cheaper than, or actually same cheapness as Amazon, if that's even a way of measuring these. But by the way I come up with this is I compare the current multiple of the company compared to the growth rate, which is expected by the company. So a 23 times multiple compared to a 12% lands you at 23 divided by 12, lands you at 1.94. And the most expensive company we have here is Microsoft and CrowdStrike. Cheapest we have here is Evo Gaming, which I've made repeated videos about, talking about how great of a company that is and so on and so forth. Might do another video on that soon, actually. Love that company. But yeah, with that being said, like it's a pretty cheap company, like massive dividend yield, all that type of stuff. Anyways, I'm rambling and saying the same stuff. Have a great day. Bye.